We have an MMT that just got a print right here. Yeah, it's a 317.2160 put. Yes, Friday's close was $135.60 a contract. We just purchased this one up at $30.50. We saved a discount of $105.10 on one contract. That equals a savings of $10,000. They have never been printed on the low since their existence in the Nasdaq 121.90 put. The highest level of professionalism in the community can never get the markdown. We are market makers, and we made that market with the world and the public. And I will tell you that that contract last week had a low of last week of 130. It had the low on 120 on 11/20 of 2011. It had a low of 135.60 was the last print. On this 2160 put, they wrote them up here on 3/20 of 2011 at 181.60 per contract to be short. What we have done to use risk management is that the last print was 135.60 in that contract, and we just created a market at $30.50 where my pointer is in this video, and that's this markdown, and that's this entry, which is 200 handles below the market. And granted, we started off with the bull rally. We got earnings season, but we don't care. We don't look at it that way. We look at where this markup was and created that print. And when we do get a correction between now and March, when that comes during this quarterly earnings season, it is 1/9/2012. Once again, we made the market here, and once we will be updating the positions on how we bought that $105 markdown and how we created that one first print in 2012 calendar year at a wholesale markdown of 135.60 to 30.50. Now, Mr. Brodsky, what do you feel about your risk entry so far being in the school versus 135.60?
It's very wholesale.
Okay. And have you ever been able to do this in your 5-year trading career at other places?
No.
And is this live? Is this here? Is this now?
Yes, absolutely.
And do you feel good about the fact that, yes, it's 200 handles out of the money, but now we have factored in the value, wholesale value of this contract, haven't we?
Absolutely.
That's a $105 markdown. Congratulations on that low risk entry. That means that his protection cost him $3,500. Yes. So that way, at this Nasdaq 100, when it's ready to, do what it did in 2011, hey, these can get marked back up with a correction when that comes. We're going to see lots of volatility increasing in 2012, and this is a quarterly 317 2012 2160 $105 markdown, and that puts risk management, portfolio risk management in play, because now that he's got the put marked down, he could go buy the upside calls at times on the Nasdaq 100 because he made his first major markdown ever to be on this side of the market. So if the Nasdaq 100 wanted to go higher, he could have calls, and if they marked it down, he can't lose any money because he's got this wholesale entry that would protect the other side of the position. Do you understand that, Mr. Brodsky?
Yes, sir.
And Mr. Brodsky, you know that once we make the market at 30.50, we have a $10 scaling feature that would be at 20.5. That puts us at 25.50 on 2 at the markdown levels. So that scalability to cost to wholesale is the next phase of this trade, Mr. Brodsky. Clear?
Yes, sir. Yes, sir.
All right. Thank you, and congratulations to a $105 markdown. And yes,
Thank you and Brian.
Well, yes, and they can go lower, but not too much, because we just took $105 worth of risk out of the contract. Never printed before. So I wonder what the professionals, we just really created a whole thing. When people look at the tape, they're going to say 135.60, that's at 30.50. I'll never want to buy that. But when we do have a correction and a pullback, one is coming in 2012. And will that correction and pullback come before 317? Absolutely. And the time premium in this thing is worth the time value here. Congratulations to MMTs. How to be a market maker in options. How to use the SMF platform.